Yeah, I'm happy with MES, two short contracts. I'm honestly eyeing a
Nice.
little bit 5800.
It's a great day, brother. Great day in the market.
Finally, yes. I'm eyeing the 5800 support.
This is going to be kind of the graphic for today. I was kind of done with it. I was looking to add a detail or two more, so that's why I haven't even posted it yet. But this is the one that I've been working on recently, and it's called the failed auction. And typically, that usually I like to look for failed auctions whenever we're kind of sitting these above these areas. So that's typically where I'll look to see if the auction is accepted or if it's a failed auction. And typically, this is what the failed auction is going to look like. We're going to try our best to trade outside of that value area, hopefully looking for an increase in volume, buyers, all those kind of things. But usually, it's whenever the price breaks the key level but quickly reverses, or there's low fall through with volume, maybe stacked imbalances to the downside. I know once we sold off, we saw a lot more weakness in this example. And then typically it'll return back to the value area. It's pretty much whenever the buyers are trying to buy the underlying up and they're trying to buy it out of the current value area that we're currently sitting in. And so if there's no success with that, that will be the failed auction. And then we're likely to sell off back into the value area that we were trying our best to get out of. And, this has a pretty good example over just the last week. Cause I mean, we've been trading in this value area. I mean, we tried here. This is a short I took yesterday. And then we tried to pop above it yesterday. And then overnight we kind of opened here and then ended up selling off. But what's really interesting too is this little highlighted area is the point of control for this balanced area. And pretty much I had a pretty bullish bias if we were to stay above here. This morning, I wish price would have been above here in the morning, and then I would look to see if price could come take these highs. But we sold off beneath the point of control, which is like automatically now a very bearish sign. Not to know that price would have sold off like that. Like there was a good chance, but if you were long, seeing price go beneath that point of control you can kind of adjust your expectations a little bit. There's a lot more weakness coming into the market. We've kind of been expecting the market to make a move. We've been in a bounce zone for a while, so seeing a trending market wouldn't have been too much of a surprise. But again, even seeing 3-4 failed auctions, that's a little concerning. So then once we do go beneath that point of control, it can give you a little confidence to manage your long position. Or if you were looking to get short and it's a part of your process, you would have a little bit more confidence to get short. But that's what's been going on for today, Luis, brother. And I mean, something that I typically look for and look to trade is I like to really trade whenever the market turns into an imbalanced market, AKA whenever we start trading outside of the value area. I'm typically looking to, get short and target the next value area, which would be this level down here. But because this was happening around 12:30, I kind of just took my hands off of the keyboard for the most part, because I personally like to take those trades within the first hour or two of market open. And because it was happening at around 12, especially 12 to 1, sometimes the market, statistically tends to be more choppy through that time of day. So I didn't really want to get caught up into anything like that. So I made the decision to not get into the market, get short, do none of that, because it was outside of the time zone I usually traded. But so, I mean, it was bittersweet. It was like, wow, what a beautiful move, but bitter at the same time, because it's like, man, didn't get to catch that one today. But the market really tends to trend in one direction once it turns inbounds outside of that zone. So, but yeah, you can see how too understanding that can kind of help you not get chopped up into trades. Like if it's in this zone, I might not be as comfortable just holding for a straight directional move. It could happen. This area right here is where the point of control is at. And you can see that the point of control played a significant role in price. So, I mean, this morning, we were nudging up on the point of control, sold off. I don't know if you've seen the post where I was talking about the initial balance, but this blue zone right here is the initial balance. This is formed in the first hour of market open. So the market was just pretty much consolidating, sold off outside of the initial balance, traded back into the initial balance, and then ultimately continued to sell off. I have the initial balance. I know I talked about that one before. So whenever using the volume profile to identify high and low points of the initial balance based on the first hour trading volume. And typically the initial balance can really serve as sort of a bias or another area to really pay attention to that price will respond to especially if it's a trending day in the market. A lot of the times when it's a trending day in the market, the initial balance tends to respect, or the price tends to respect the initial balance a little bit more. So you can see down here for this example, I set up the initial balance, had a lot of consolidation, and we had a pretty strong trending market in one direction. But anyways, the initial balance could have been used as another point of reference if somebody was using it. So yeah, I mean, I was paying attention to that point of control all week as well. Whenever price comes here, he's trying to hold above it, trying to hold above it, trying to hold above it, and then clearly he's breaking down, and then the point of control started being used as a form of resistance, and then we ended up selling off. But you know, again, nobody knows exactly where the market's going to go. But again, like if price was sitting above here, sitting above this point of control, it might be, me personally, I would have more of a bullish bias. And then, you know, again, whenever we see price trending beneath here, it might naturally have a little bit of a bearish bias. But that's kind of how I view things as well. Because again, if price opened up this morning and we were holding above this area right here, I definitely would have been looking for longs. But because price never even was up here any time of the day, there was never even an opportunity to really look for longs. Down here, was able to spot a lot of weakness today again too. But you know, when I see that weakness, part of me and how I like to trade things, you know, yeah, I guess you could have gotten short and traded towards this value area low. But again, this is really the trade that I wanted. It just didn't happen in the time of day that I would have hoped it would have happened in. So I wasn't looking to force anything. But you know, where are you mostly looking for trades? But I like right now, for example, we're in an imbalance. So if somebody wanted to get like a good idea in the eyes of auction market theory, like where are we at right now in the market and what are we currently doing? This is the current phase that we'd be in right here. And then today's just a perfect example of that. But we were talking about the TPO last time, the time price opportunity. That's kind of what, oh, let me take that back off. That's kind of what this is right here. But we had some poor lows put in on the TPO the past couple days. So we had a 3-block low right here, a 2-block low yesterday, and then we finally came and finished this auction right here. These are just really nice to use for a point of reference for the most part. Other than that, that's pretty much all going on, Luis. Interesting to see if price wants to stay and hold above here, or if price wants to actually get down into this balance zone and find price acceptance, then we might start coming into this zone and start ranging a little bit. Or maybe we'll react off of this and start trending back to this liquidity zone. I don't know what's going to happen, but we will see into tomorrow, because for the most part, after 9:30 and 11, it's pretty much screen time, pretty much just kind of watching what's going on and then managing expectations and preparing. I guess that's pretty much it. 90% is just such observing and observing and preparing and observing and observing and then just waiting on that. I'm kind of just zooming in here. This one was from, I think it was like yesterday or maybe the day before that, but it was from this week. It was either Monday or Tuesday. The point of control, as price started getting closer to that point of control, you can see right here these imbalances on the bid, and you can see how aggressive sellers are taking control of this bid. And it's like, it's important within context. We can find imbalances pretty much everywhere, but the fact that we see sellers get super aggressive right around this point of control for the week in the balance zone that we were looking at, just lets us know how much of like a factor point of control can play in terms of people making decisions. Because I don't think it's a coincidence. You know, the bids started absolutely getting smashed once we're starting to see weakness in the point of the control. And then from that, the market actually started to sell off from there whenever we did start seeing sellers get a lot more aggressive at the point of control. That's another really interesting remark. Like, for example, yesterday, when I did see this yesterday, this is where I started to add to my position, because I remember I was getting short a little bit here. And then when I saw this, it gave me the confidence to actually add whenever we did pop a little bit. So it's like those little things will increase your conviction in kind of what you're doing sometimes, or that's how it'll kind of help me. I'd rather be patient, let it come to my level and take profit rather than trade frenzy and get chopped up in the swings. No, yeah, I agree with you. Stacked imbalances show a consistent dominance of buyers or sellers over each price level. And it kind of just shows where participants are being more aggressive or just, not as aggressive. But pretty much those box will highlight when the buyers or sellers are being very, very aggressive in relation to the current sellers. For example, I kind of have it highlighted right here, and I'm going to actually zoom in just a little bit. So we understand the left side is the bid, the right side is the ask. I used to read these wrong for a long time. That's the only reason why I have it annotated on here. And I have these arrows pointing from one to the other, because This is an imbalance. There is 38 sellers to 132 buyers. We read it diagonally. I personally used to read it left to right. I used to read it 42 to 132, but really this one is 38 sellers to 132 buyers. This one's 42 sellers to 139 buyers. This one's 71 sellers to 259 buyers. So it's just a ratio. It's whenever, buyers or sellers are outweighing either buyers or sellers. Like again, there's about 3 to 4 times the amount of buyers than sellers here. And then same thing, there's about 3 to 4 times the amount of buyers here than sellers here. So it'll just really show again when buyers are that much more aggressive than sellers and vice versa. So it'll show like the pockets within the candlesticks that large orders are hitting the market. And typically whenever we see stacked imbalances like this, it's not a surprise to see like momentum continue with those. So sometimes seeing those, it'll just build your confidence because you're seeing how aggressive people are positioning themselves right now in the market and kind of where that is, and if they're buying or if they're selling. So like, for example, if I was short and I was scalping, if I saw these imbalances pop in the market, I'm getting out. I'm probably cutting my losses. Not that this has to keep going, but it's very likely, and it's showing us that momentum is shifting to the upside. So if I was getting long, maybe I might start adding to my position. So you can kind of use it to add to when you're on offense and then when you're on defense. Like, you can use it in both scenarios to help you manage your risk and to help you gain more conviction for your profit.
I'm actually learning something new today. I did not knew that we're actually red diagonal.
So that can kind of just help with, again, the stacked imbalances within the candlesticks. Not a strategy in itself, but it's like if you already had a long bias and you were already looking to get long in this area, if you see something like this, it's just going to give you more confidence. So it's not a strategy. It just gives you more market context and you're just more aware of what's going on right now in the moment. So I know, like, even right here, I put off to the side, stacked imbalances, things lagging a little bit. This last bullet point, it says stacked imbalances should be used to validate your existing idea, not to chase every sign of momentum. So just because we see the stacked imbalances doesn't mean we should just try to go scalping every single move to the upside that we see. This should only be used if what's happening is a part of our game plan and something we were kind of already expecting, and that would just add to our confidence and conviction of the trade, if that makes sense.